Tonight, a major shift is underway in the world of energy. For decades, Canada supplied oil almost exclusively to the United States, defining North American energy security. But that's changing. Canada has opened a new gateway for its oil, and the first destination is not the US, but China. This marks a historic pivot, signaling Canada's ambition to become a global energy player. The move will reshape trade relationships and has major consequences for Canada, China, and the US. Canada is asserting its economic independence, tired of relying on a single customer. By reaching new markets, Canada hopes to get a better price for its oil. For China, it's a strategic win, a stable supply from a reliable partner. For the US, it's a loss of influence and a challenge to its long-held position as Canada's exclusive energy partner. Canada has the third largest proven oil reserves in the world, yet for years sold almost all of its exported oil to the US, often at a discount. The lack of pipelines to its own coastlines made Canada a captive supplier, benefiting American refineries. Canadian leaders and the energy industry have long dreamed of breaking free and accessing Asia's booming markets. Now, that dream is reality. The completion of a controversial pipeline has given Canada a direct route to the Pacific. This is about more than one pipeline. It's a fundamental change in how Canada sees its place in the world. It's a bold move to diversify and reduce vulnerability to US political and economic pressures. As of July 15, 2025, we're witnessing a new chapter in global energy politics. The implications for workers, consumers, and governments in Ottawa, Beijing, and Washington are immense. The ripple effects are just beginning to be felt across the globe. For over half a century, Canada produced the oil and the US bought it. A vast network of pipelines sent millions of barrels south daily, fueling American refineries built for Canadian crude. This exclusive relationship gave Canada a steady customer, but little bargaining power. Canada was forced to sell oil at a discount, leaving billions on the table each year. The US benefited, buying cheap crude and selling refined products at full price. This created an imbalance. Canada was rich in resources, but not in returns. The US had little incentive to support Canada's efforts to reach other markets. Any new pipeline to a Canadian coast meant more competition and higher prices for American buyers. This underlying tension set the stage for the conflicts and strategic shifts to come. The system worked for the US, but left Canada frustrated and eager for change. The stable Canada-US energy partnership began to crack over the last decade. The Keystone XL pipeline saga was a turning point, delayed, politicized, and ultimately canceled by the US in 2021. This signaled to Canada that its economic fate was tied to US politics. Meanwhile, the US shale boom made America less dependent on Canadian oil, further weakening Canada's position. Canada now faced a future where its main customer was also a competitor and could block key projects. The urgency to diversify became a matter of national strategy. Canadian leaders realized they couldn't let their most important export be hostage to another country's politics. The only way forward: build a path to the sea that didn't run through the US. The focus shifted decisively from south to west. Diversification was no longer just an economic goal. It was essential for Canada's future. The dream of reaching Asia's markets became a national imperative. Canada was ready to chart its own course. The answer was the Trans Mountain Expansion, a new pipeline alongside an old one, stretching from Alberta to the Pacific coast. This project finally gave Canadian oil producers direct access to tidewater and global markets. Building it was a battle fierce opposition, environmental concerns, and the original owner walking away. In 2018, the Canadian government bought the pipeline, declaring it a national interest. Now, in 2025, the expansion is complete, tripling capacity to 890,000 barrels per day. The cost soared to over $34 billion, but for Canada, it was the price of economic independence. For the first time, Canada can send significant oil volumes to markets beyond the US. The pipeline breaks the American monopoly on Canadian crude exports. It gives Canada leverage in price negotiations and opens doors to Asia's fast-growing economies. The Trans Mountain Expansion is Canada's new gateway to the world. In May 2025, the first supertanker, the Pacific Pioneer, loaded with 550,000 barrels of Canadian crude, set sail for China. The buyer, Sinopec, one of China's energy giants. This shipment was more than a business deal. It was a symbol of Canada's new direction. Chinese refineries are well suited for Canada's heavy crude, and a stable supply from Canada is highly attractive to Beijing. The economic impact was immediate. The price gap between Canadian and US oil narrowed to its lowest in years. Canadian producers could finally sell closer to global market prices. The federal government estimates billions in added GDP from improved prices and export volumes. More revenue for government, more profits for companies, and more job security for workers. For Canadians, this could mean a stronger economy and higher living standards. The journey of that first tanker represents a new era of prosperity. Canada's oil is now a global commodity. For China, Canada's Pacific oil route is a strategic win. China, the world's largest oil importer, seeks stable, diverse energy sources. Canada offers political stability and reliability, unlike some of China's other suppliers. Direct trade from Canada reduces China's dependence on volatile regions and risky shipping lanes. Access to Canadian heavy crude fits China's advanced refineries and supports its industrial growth. By locking in long-term contracts, China gains supply security and influence. This new relationship could lead to further Chinese investment in Canada's energy sector. The deal fits China's broader strategy to diversify supply and expand its global reach. Securing oil from a G7 nation subtly challenges U.S. influence in North America. China is building strong economic partnerships, even with America's closest allies. For the U.S., Canada's new oil route to Asia is a mixed bag. The U.S. loses its privileged position as gatekeeper of Canadian oil exports. American refineries will pay more as Canada sells on the global market. The move signals Canada's intent to act independently, no longer content to be tied to U.S. interests. Some in Washington see this as fallout from blocking Keystone XL, a lesson in unintended consequences. The sight of Canadian oil flowing to China unsettles U.S. strategists, deepening economic ties between a key ally and a rival. The era of exclusive U.S. control over North American energy is over. Some U.S. officials see a silver lining, a stronger, more resilient Canada. But the overwhelming sentiment is concern. The U.S. must adapt to a more multipolar world. The global energy landscape has shifted, and America's dominance is no longer guaranteed. Energy experts are weighing the long-term impact of Canada's bold move. Dr. Maria Sanchez, energy economist, says the Trans Mountain Pipeline will lead to a more efficient, transparent global market for heavy crude. Infrastructure finally connects Canadian oil to the world, closing the price gap and benefiting both producers and Asian consumers. Dr. Kenji Tanaka, geopolitical analyst, notes Canada is wisely diversifying, but warns of the risks of tying its economy to China. Ottawa must balance economic gains with the political pressures of a powerful new customer. In the U.S., former State Department official Sarah Miller calls this a wake-up call. America took its energy partnership with Canada for granted. The lesson: if the U.S. isn't a reliable partner, allies will look elsewhere. This should prompt a more collaborative energy strategy with Canada and Mexico. Environmental voices in Canada warn that the focus on new oil markets locks the country into a high-carbon future. While the government celebrates higher prices, critics argue Canada is doubling down on fossil fuels as the world moves to cleaner energy. The economic gains today could be overshadowed by environmental and long-term economic risks. Canada faces a tightrope prosperity now, but at what future cost? The new energy map is full of opportunity and uncertainty. The world is watching how Canada navigates this new era. Canada's decision to export oil directly to China is a landmark event, signaling a fundamental shift in global energy. It ends North American energy isolation and ushers in a more interconnected, multipolar world. Canada gains economic independence, China secures energy, and the U.S. faces a new reality. The comfortable energy dynamics of the past are gone, replaced by new challenges and opportunities. This story touches on energy security, economic competition, and climate change. The journey of that first tanker is a symbol of a world in transition. Old alliances tested, new partnerships forged. In the 21st century, a single pipeline can change not just the flow of oil, but the course of history.